Hey everybody, Seth Dailey here with the Dailey Group, and I wanted to share a couple things that I'm looking at in the market right now. So, the market data is always a little bit of a lag behind. So we're looking at some information right now that is, it's early this year, right? So we're actually looking at January data as we're finishing out the month of February, and it's interesting. There's a couple things that we're noticing as signs in the market right now. Number one, new listings. This is a huge sign of health in the market. New listings are actually up compared to December, but they are down year over year. So new listings are down almost 11% year over year, comparing January 2021 to January 22. That's a big deal, and we're going to see that having an impact. One of the areas that we see that have an impact is actually when I start to look at this idea of what's going on with inventory. We are at just some of the lowest levels that we have seen in a long time. Active inventory, the active number of listings in the Baltimore metro area at the end of the month at just over 2,500, just a really, really low number, significantly off from a normal range. And then we see that play out in two other ways. One is the speed of the market, right? So average days on market is down 27 days, normally a lot higher than that. And the average sold price to list price ratio is almost the highest it's ever been. So 99.5%. And the reality is we're watching some properties bid up over asking price, some properties down below. But here's what I really want you guys to pay attention to, just with all of the world events that are happening right now. Interest rates are having a massive swing. When I look over the last 6 months, that's what this chart is showing. And here's almost 6 months ago in August. And we have just watched this steady climb of interest rates as they are going up. And interest rates are up almost a percentage point in that time period. What does this mean for you? If you are considering buying, just understand that your purchasing power is dramatically impacted by interest rates. A 1% increase in interest rate has a 10% impact on the ability that we have to purchase a home. It erodes purchasing power by 10%. The reality is the rates are still incredibly low from a historic perspective, but the Fed has declared again and again that they are going to raise interest rates. There's a lot of reason why, as a buyer, if you want to look out 5-10 years and say, is this the property they want to be in long term? And if it's not, now would be the time to make a move to make sure that you're locking in long-term interest rates.